Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hi everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. As usual, we will continue to talk about the euro currency and start from the daily time frame. Well, our suggestion about that market could proceed to move the up way has been accomplished during yesterday's trading session, so market has accelerated right to the upside and hasn't slightly reached the weekly pivot point, just accelerated before that almost to the weekly pivot resistance ones right here, 130.67. Well, in general, in the medium term, we have the reasons to think that market will proceed even higher, and mostly due to the weekly analysis, weekly time frame analysis, and daily time frame analysis. As we suggest in our weekly thread on the forum, on our weekly research, this was some kind of the three-drive buy pattern, and the minimum target of this pattern is the top between second and third drives. So that is this level. It's 132.20 area. Also, that is the daily confluence resistance, and it's very close to the daily overbought. So market could proceed higher until that area, but it could do this in different ways. Also, on the weekly time frame, there could be some kind of directional pattern, definitely directional pattern, because thrust on the weekly time frame to the downside is solid, and this could turn to the bread and butter sell on the weekly time frame, and that is will be a really solid pattern and solid perspective when on the weekly time frame you can see some nice pattern to trade. Well, what we could expect from the market currently? From the one point of view, market could proceed higher, since here is no more solid resistance. Here is just above the market on the weekly pivot resistance and monthly pivot. Pay attention that it hasn't been traded yet by the market, and as you know, pivot points usually are traded by the market during the period with the 70-80% of cases. So market could proceed higher. Well, right to that area and show some kind of taking out of that high. That is the first scenario. The second scenario, as you remember, once we also suggested that this could be some kind of the reverse head and shoulders pattern on the market. It's not perfect, since the shoulder looks too narrow, too tight, and opposite to the head. The head looks really massive. It's with the wide and broadening bottom pattern. It's a bit heavy, looks heavy compared to shoulder, but probably we could treat it as some kind of the reverse head and shoulder. In this case, market could find some resistance in that area and then shows the 618 retracement from that swing to the upside, and only after that will proceed to the upside. That's the second scenario. Both of them will be valid, since even if market will show this 618 retracement to the downside, I suppose that daily trend will hold bullish and will hold this retracement to the downside. You can see this trend is really strong on the daily time frame. But on the daily time frame, we can't find the solution to this perspective. We couldn't estimate based only on the daily time frame which scenario could prevail, right? Direct acceleration to the upside or some kind of the potential reverse head and shoulders on the daily time frame. Well, and I suppose that particularly this task we will decide during the today current tradings week. Well, on the 4-hour time frame, what we see? Trend still holds bullish, but now you can see that market is trying to shift it to the bearish side. Also, we can see some kind of the divergence, bearish divergence with the MACD indicator. Take a look that this top stands precisely at 1618 extension of that swing to the downside, of that retracement. From that high to that low, it's 1618 extension. So that could be the potential for the three-drive sell pattern, especially when we see such retracement that is coincides with some kind of the divergence, this could be the sign of the potential free drive sale. So if you will count and you'll try to estimate the potential retracement so that 1618 extension stands somewhere around the weekly pivot, monthly pivot resistance 130-120 area, you will find that this retracement should be to the nearest fib support at 129.34. It's right here. If market will accelerate further from that level, this could be the potential for the free drive. If market will break that level and proceed lower to the hour confidence support that we specified in our weekly research, it's 128.58, 128.93. It's right here. Although it's a bit wide for the confidence, but still this is treated as the double support. Some kind of two levels stand very close to each other. Also, that is the weekly pivot point, and that is some kind of magnet. Market in most cases tries to test the weekly pivot points during the week. So if market will break that level and proceed lower, this could be the reverse pattern, is the head and shoulders on the 4-hour time frame, because 1618 extension also is very typical for the head and shoulders pattern. In this case, the second pattern that we could try to catch is the potential head and shoulders pattern on the 4-hour time frame. In that case, if market will form the reverse pattern, the scenario with the reverse head and shoulders on the daily time frame becomes more probable, because due to this pattern on the 4-hour time frame, market particularly could start the deeper retracement, because this will be the reversal pattern, and this could lead to the deeper retracement on the market, and particularly lower, to create the 618 support with that swing. Okay, so as you can see, there's a lot of possibilities, and it's currently very difficult to estimate which one will prevail. This could be the free drive, market could just accelerate further to the upside, as we said, on the daily time frame, or market could show some reversal pattern. On the hourly time frame, first of all, take a look how market develops according to our analysis. So we said that here was two side-by-side stop grabbers. We said that market should create at least the new low, or probably even reach that level, as the ABCD pattern that we have discussed. Market has taken out that low, but then reversed to the upside and accelerated further. So it hasn't quite reached our level of support. Now, that was the nice context for the Jordan-Napoli double repo sale pattern. So you can see nice thrust to the upside, about 10 bars, close below the 3x3 line. That is, the green line is the 3 periods simple moving average shifted forward for the 3 periods, displaced moving average, close below it, close above, and then close below. That is the triggering bar. The minimum target of this pattern is A, B, C top, 100% extension is 129.91. Market already has hit it, but this not necessarily means that market will stop here and then accelerate further to the upside. Market could proceed lower, because double repo pattern could be as short-term reversal that could trigger the retracement as longer term reversal, so it could be some deeper move to the downside. You can see that 1618 extension stands very close to the some kind of the confidence support, 29.34, 129.47. It's right here. Also pay attention that hourly trend currently is bearish, and it suggests that market probably will show some deeper retracement to the downside. So how we could act in this a bit confusing environment? Because we see that 4-hour time frame, daily time frames are bullish, hourly time frame is bearish, and this could be reversal pattern or it could be continuation pattern. So what we could do in this environment? Well, first of all, we should keep an eye on the hourly time frame, because while hourly time frame holds bearish, it suggests deeper move to the downside. If you would like to enter long on this market, the continuation to the upside, it's better to wait when the daily time frame trend will hold bullish as it stands now, and hourly time frame will turn to the bullish side. For instance, market could reach some significant support and then reverse further to the upside. If market will shift the hourly trend on the bullish side, you can wait first thrust from that confidence support, for instance, and wait for the nearest short-term retracement to the 3-8 support of that new swing to the upside to enter on the long side of the market. That will be at least safer than enter on the long side now when hourly trend holds bearish. That is the first potential decision if you would like to trade based on the trend. The second is to take a look at the current potential patterns. So if you will see that market will find support here and starts to accelerate from that level, 129.34, it's right here, and then you could shift to the hourly time frame, wait when the trend will turn to the bullish side, and enter as we just explained. In this case, this could be the 3-drive sell, and market will show some acceleration taken out of that highs. The second scenario, if market will break it to the downside, you know that that is the solid support area. You could wait how market will respond in that area when the market will hit the pivot point, drop your time frame to the hourly time frame, and wait when the trend will turn to the bullish side. In this case, this could be the head and shoulders, and you could catch at least the 618 retracement, since the 1618 extension is very typical for the head and shoulders. But in that case, this will be probably the reversal pattern, and you should think twice, should you enter on the long side of the market in this case or not. So we consider this a lot of chances, but there are two primary things that we should keep an eye on. First of all, hourly trend. Second, these patterns that we have just discussed, because they will give you the clue of what could happen on the market. If the market will find support here, then you could try to enter along with the target, at least this 1618 extension of that swing to the downside. If market will break that level and reach that level, next support, this could be the head and shoulders reverse pattern, so you should act accordingly. That's current situation. This is the framework that usually corresponds with such kind of price action on the market, where market could show different scenarios of the further development on the higher time frame. So that is our expectation on the market currently. Keep an eye closely on the things that we have just discussed, because they will help you a lot to make the decision and understand what is going on the market, and they will help you to make the right decision, right trading decision.